Good morning, traders. Welcome to this week's Elliott Wave Forex and Cryptocurrency Market Analysis webinar. Hope you're all having a wonderful Sunday. It's a beautiful Sunday in South Africa this morning. Bright and sunny weather, nice and warm. All right, so hope you're having this nice weather in your places there. So we've got a very nice webinar lined up for this morning, as always. So stay tuned, stay glued. So as usual, please look out on the description on the videos. This webinar is about 1.5 hours long. So on the description of the video, if you go to any of my videos on YouTube, you will find, let me just give you an example. I said I did not open YouTube here. So you'll find on all my videos under the description, there are timestamps where you can just go into each and every pair without having to toggle around and look for pairs. So you don't have to watch everything. You can just pick one pair and look at it. So I like these timestamps because if it's a video like this, you can just pick out one pair. You can just pick out one pair and track it going all the way back to when I started putting in the timestamps. So you can start doing that and go back as far back as January. So if there's one of the most amazing pairs that we've been looking at are the CAD pairs from the beginning of this year, Pound CAD, US dollar CAD, and especially EUROCAD. Those pairs have been doing great, and we've analyzed them spot on for many pips. So this way you'll get this. Just get my annotation tool and point it out clearly. So you get it on the description of the video here where it says show more. You can just scroll down. You'll see that each and every pair is time-stamped, and you'll see there the very first thing here is the link where I start talking about the course. It's only a 2-minute discussion about the course and what the course is about. So talking about the course, the next one is going to be in September, the 10th of September. The course is 2 weeks, and after attending the course, you stay with me in the premium group for 2 years. Okay, so the cost for all that is $529 US once off. So what we do in the premium group is update all these charts in our Slack platform, which we use for the charts. So if you're interested in the course, send me an email. The email will be also on the description of the videos. So you can send me an email. You'll get an automated response with all the details and how we work, including the course content. So if you're interested in that, you can just send me that email. All right, so let's get started. I see there's something on the chat box. Beautiful. Greetings in Botswana. Okay, so let's look at the trade recaps. That's what we usually start with, because if we're doing this analysis, we need to see how they actually play out. So I'm gonna take a look at some of the trades that we have been looking at. So let's just have a look here what we've been looking at, and some of these we've been looking at for quite some time. So I'm just going to look at what some of the setups that we were looking at last week. This one was actually the one in 2017. I posted this one in 2017. I think we discussed this one last week. This was pound US dollar, and you could see here that we wanted it to just pop up there and break the top and break and give us the Z leg here. So what eventually happened is that this one just broke the top here, give us an A-B base pattern, and then that's why we're getting the drop. So we're gonna update how this is going to play out going forward. So that was pound US dollar. You can see that is the after. That's what happened with the analysis. Okay, that was last year. This happened from last year. You can see here the setup was posted last year when we were here. We wanted it to come up, break the top, and come down. So all that because we're following the sequence. Okay, so if you're following the sequence, you know how the sequence plays out, then you most likely get the predictions or the forecast right about 90-95% of the time. Okay, so forecasting is easier than trading, obviously. So you need also a strategy to be able to time the market. Okay, because as much as you know the direction, you may miss the trades, or you can enter trades and exit trades because you do not know what a pullback is, when is it a correction, and when is it really a trend. So pound CAD, one of my favorite pairs of the year. Okay, so here we were we actually sold this one here based on the structure. I'll show you during the analysis why we sold it there, and we were tracking this correction. So you see, when you know how the market plays out, you anticipate these pullbacks. So if you sold here, you can see that this is a couple of days, okay? It's a couple of weeks. How can you hold here with confidence and not get out of the trades when the market is doing this? Can you see the roller coaster ride of emotions that you can go through here while the market is coming down, retracing, and you think it's coming, it's reversing, you think it's reversing? So when you understand the structure and you are confident of your strategy, you will not panic when this happens. That's why when this happened, we actually anticipated, and while we're having short trades here, we actually buy here short term, and these are those almost guaranteed type of trades, short trades, but very rewarding at the same time. So this was the before of CAD. On this correction, we bought here for a short move, anticipating that this one is going to come. It's actually coming down all the way, which we expected as well. So this is how that played out. Pound CAD. So last week when we were here, I mentioned that this will not bounce back. It will push all the way down, and that's what happened. So let's just carry on, look at the others. Another one was EURCAD. Amazing when the strategy plays out. Okay, so this is similar to pound CAD. Also, we wanted to correct and give us the last leg up, which is what we did. And now this week has just reached target. Yesterday it was just a few pips from target, so now it has reached target, and I'm still anticipating that it will go much further. It will still go. Okay, so that is how that played out. This way we bought for this short move. You can see what happened exactly to the blue box. The power of this blue box is amazing, and it comes down like that. Okay, and while that was coming down, remember this is where we sold from the blue box. Look at this, look what happens. It actually goes up. But if you understand the strategy, you anticipate these moves. So you will not panic if you've got a trade coming down here and this is going up here. You actually can take a short buy if you want, if that is your trading style. Okay, so you can see that we've got that move down, and that pullback, we had the pullback. So that is the kind of confidence this gives you, understanding when you get these short pullbacks. Because if you look at this candle, it looks very strong, and somebody who is not clued up about the strategy, does not understand the theory, will panic and get out of the trade and think this is reversing. But meanwhile, we know that this is only doing a three-wave pullback for further move to the downside, and eventually looking for that target as we were anticipating when it did that. And this one also, we sold it here based on the strategy. Okay, so let's move a bit faster on this. This is now another amazing one here. Was pound JPY. Pound JPY, this was a couple of weeks back, 23 June, when we expected that this was going to move to the downside with a short move. I was actually not interested in this short move. I got the move to the upside as we were anticipating, and the down move, which is now gone 800 pips down. So we had 600 up and 800 down. You can see I posted this on the 240. I also posted it on the daily. So on the daily, that's where you see it clearly. Look how this one plays out. Okay, it was actually not complete, so let's just go to the one that is complete. The one on the daily is this one. Let's just see here. Here's the one on the daily. See how amazing this plays out. So on the daily, you get a short move to the downside that we were anticipating. It moves 600 pips. This looks short, but this is 600 pips to the upside on the daily. And this move here is another 800 pips. What am I anticipating? I'm still anticipating continuation on this pair. And the yen pairs have been rewarding this past week. I hope you guys caught the move, because we discussed these trades here. All right. So one of the trades that we looked at this past week, a new one, was a pullback for USD CAD. As you can see here, USD CAD V pattern textbook. You get that move, you get a small correction there, and you get that move. So that is how that move played out. So if you see here, I don't know if I've posted the chart after. That is what the after chart looks like. So when you understand how the market moves, you will anticipate these pullbacks, easily reach target there. All right, so those are the trades that we have been looking at, some of the setups that we look at. Obviously, these timings with the charts is what we share in our premium group. which we use the Slack platform for. And we've got traders that are doing very well, and they actually do not rely on me posting these setups because they know they've been trained, they understand the strategy. All right, so let's get started. Let's go back to our analysis. Let's go back to the analysis here. There's so many of you guys attending here today, so thank you very much for joining us. Welcome to those that have just joined us. Let's open now. Let's go to Trading View here. I just need to open Trading View. See, it's not opened. All right, so just for information, these webinars are held at 12 p.m. South African time every Sunday, and it is 10 a.m. GMT every Sunday. So for the links, you can follow my personal profile on Facebook. I post it about an hour, 2 hours before on a Sunday morning, or you can also check it on my Telegram channel, which you will find the link on the description of the video. I posted there, so you will not find any trade setups on my Telegram's channel except the links to the webinar, as well as the videos, the recorded videos. So you can look out for that. Okay, so I will usually post that, and I'll post also the link on the description on the comment section of the video, so you can look out for it there. All right, so let's go to the analysis, today's analysis. Everybody ready? Welcome to those that have just joined us, and now we can get started with today's analysis. So we are going, as always, we're going to start with the Euro-US dollar correlation with the dollar index. So let's have a look at this before we even put up the numbers, the letters there. So let's have a look at this correlation and how this is playing out. Okay. Right, so let's look at this. So I'm going to look at this last piece here. Okay, we've been tracking tracking this trends for the last couple of weeks. You guys should know what is going on there. So today I'm just going to follow on this link and what we have been expecting on this pairs. So I've been looking at this structure. So this structure is the top chart is a Euro-US dollar, and the bottom is the dollar index. So if you look at both these charts, they're making impulsive moves to the downside. And when we got to this level, you had two alternatives that you were looking at. So if you look at Euro-US dollar at the top there, let's just have a look at what we're looking at. And I know the chart may not be clear with two charts on the screen. I'm going to go into individual charts in a moment, but I just want you to see the correlation first before we get started. So this is what we have here. You've got one and you've got two. This is your wave one, this is your wave two that you're looking at here, and this one gives you a 1, 2, 3, 4, 5. So initially we had two options here. Either this was a wave 3, or it could have been a wave 5. And I'm going to discuss both options. So similarly here on the dollar index, you had a pulsing move to the upside, you had a correction, and internally you had a lower degree. This lower degree goes in 1, 2, 3, 4, 5. So was this a fifth wave? Because this could have been a fifth wave, and this was what could have been completed. So what we're looking at here was either that this is going to give us a structure, a three-wave structure like that. Maybe you get a correction here. This is what I was anticipating. I was anticipating one push higher before it comes down. All right, so it did not give us that one push higher that we were looking at. And I'm going to show you why I was looking for that one push higher when we look at the individual chart. Okay, so similarly here, we were looking at this last piece here as being the wave 5 here, ending with a diagonal like that. Okay, so let's have a look at the individual chart of Euro-US dollar, and we're going to look at both of them individually. Let's go to one chart and see what we're looking at and how this is playing out eventually, how that has played out eventually. Let's just go back to one chart. Okay, so this is what we have now. This is Euro-US dollar. So now you will see the structure clearly here. Now we've got one chart here, and see why we're looking. What are we looking at? 1, 2. Okay, internally you've got 1, 2, 3, 4, 5. Okay, when you look at this, there was an alternative that this could have been this could have been a wave 5. 1, 2, 3, 4, 5 here, and this was going, and sorry, this was going to be a 1, 2, 3, 4, possibility of a truncated fifth here. Okay, and why are we even looking at this as a 1, 2, 3, 4, 5? Let's have a look. Now look 3, 4, 5, anticipating that this will be a truncated fifth wave. So in that case, then that means that this should be a correction. So that's why we're looking for one push higher for this one before it comes down. So now, how did this play out? Most of you know that I always say that I have never seen, I've never really seen a proper triangle that follow all the Elliott Wave rules. But in the last couple of days, I actually got to see about 4 charts with proper triangles that follow the rules and guidelines to the pip, and we're going to look at those charts. So that's the one thing again about patterns when you're trading. If you trade only the things that are there, you will always get it right. So you do not force anything. You shouldn't be forcing any patterns that do not exist just because you've learned about them. So I've learned a triangle, and I had not traded a triangle in the last 2 years, but the last week on Euro US dollar, Audi US dollar, New Zealand US dollar, I discussed those 2 triangles, and those 2 triangles actually follow the Elliott Wave principle to the pip. So Euro US dollar instead also made a triangle instead of a 3-wave correction, and that means then that this is actually your wave 4, and you do not have a truncated fifth there, and this is how your triangle will look like. So this is what your triangle will look like here on this one, on the daily. So you had the triangle, and this is how your triangle looks like. It is an A, B, C, D, E move before you drop. Textbook stuff, and you get that drop A, B, C, D, E. And that is a perfect triangle, and you will see that Audi US dollar and New Zealand US dollar, the 2 triangles that we discussed last week, have also played out to the pip, and that's why you're getting this drop. So what does this mean for this pair now? That means now that you've got your 1, 2, 3, and this whole triangle is a wave 4. This is 1, this is 2, this is 3, and now you've got the structure, and it makes sense, and you've eliminated all other possibilities. So sometimes you just need more information, okay, to be able to forecast. So this one is now playing out very well. So we are now looking for a wave 5 here, which is around, the target is around 1.3, the 1.3 area. If I just put on where my target is for a wave 5 minimum, let's just have a look here. So there's the case there. So I'll be looking for my wave 5 around 13138 before you start getting a correction. Remember, this move here is an A wave. This 1, 2, 3, 4, 5 that we're looking at is an A wave. So that means here now, instead of this being a 4 here, you've got a 4 there, and you're looking for this one to come down as a 5. And that is how you adjust and update your charts. So this is only the minimum. We've already reached the minimum here, but mostly on back testing, most of the time you find that your wave 5 is around the 1,618 of the reverse move between 3 and 4. Okay, so this will still be your B, and that will be the correction. We were looking for the correction here on this area. This is the correction that we were looking for here when we wanted that move up, the B move. Okay, so now we can see that the B move has not happened, and now we're just looking to complete this A wave to the downside. So exactly the same thing is happening on the dollar index. So let's just look at this one on the 4-hour and see how we trade this one going forward. So this may have left you, unless you get a clear correction, something like this, something this size, you want to wait for a bigger correction if you missed this trade around this area. Okay, so look for continuation, but be careful now that you may be around the 1,618. Let's just have a look here. But there is no indication of reversal at this stage, so you can keep taking this one every time you get continuation until you start seeing signs of reversal. So that is where the sequence is going on that one. The dollar index is exactly the same. If you just look at the dollar index, it is the complete inverse. So the dollar index, we are now also looking for a wave 5 in the opposite direction. We're looking for wave 5 there. Just have a look, take this off there. Switch off. So we're looking for that wave 5. So look for continuation here for a move up to that level. Okay, so that's what you're going to be looking out for in the next week. I do not think it will reverse in the next week, but keep an eye and see how that plays out. So just going back to Euro US dollar and the analysis last week. So last week, this is where we were on Euro US dollar. We were here and we wanted it to push a little bit lower and get that bounce. So from this bounce, I expected that it was going to go up there to complete the wave 4 before it drops. But instead, it had already started the move from the wave 5. Okay, it had started the move, sorry, from the wave 4 here, which is this one, which is the triangle. This is the structure that we were looking at instead of a triangle, but instead it played out as a triangle that I've just shown you now. All right, so now that is how that plays out. So watch out for continuation patterns to the downside. Looks very interesting. So now let's look at the other triangles that we discussed last week, and that was AUD US dollar, exactly the same thing. So this one we looked at last week. So if you watched the video last week, we looked at this triangle as a 1, 2, 3, 4, 5, and then you're getting this move to the downside. Here you're getting continuation. Okay, so if you couldn't see the structure for the Euro US dollar structure properly before the triangle completed, this one would have given you a guideline. It's a textbook triangle A, B, C, D with all the 5 waves divided in 3s. Okay, so now you're getting this continuation here for confirmation of more downside. So how do US dollar look for more downside in the next week? So same thing that you'd expect on Euro US dollar as well, because now the triangle looks to have been completed. So if we just go to the 1 hour, let's see what you're getting. It looks like you're getting a small flag there. So that is the flag that you're getting. So wait for this flag to complete. Do not rush it. It is still premature now, but once it completes and it breaks down, you can hop on to that one. Okay, let's clear that. See, there's something on the chat box. Someone was talking about the MACD showing divergence. I can't remember. I don't know which chart we were talking about. I don't know if we were referring to the Euro US dollar. There's a divergence. There was divergence on the daily, but you could see that that did not play out. All right, so let's have a look. There was Audi and New Zealand. We also discussed the triangles. Let's go back to the 4 hour and look at those triangles. These are the triangles that we looked at last week. Right, 1, 2. So just clear this and remove all this stuff here, all the fib levels here. So you can see there's a textbook triangle, 1, 2, 3. Actually, this one does not make a triangle. It makes a 3-wave correction like that before we drop. Okay, so this one is not a triangle, it's just a 3-wave move before we drop. And now look out for continuation. It gave a very textbook entry last week, after making a 3-wave correction, it come down. So you could have missed this move here. You could have even missed it here. But when it came to this level, you're getting a clear 3-wave correction. And if you go into the 4-hour chart there, you'll see that is not just a flag. A flag is just a way of saying a smaller time frame correction. So if you look at it in the smaller time frame, you'll see that there's a clear structure here on this pattern. So which is also another 3-wave move, which could have been an entry after the 3-wave move has completed, which is this one here. So now you're getting the move to the downside. So look out for another entry like that, continuation to the downside. So we'll be looking for continuation to the downside. Oh, sorry, that's not where we're looking at. So you're looking for continuation to the downside. Every time you get flags like this, that's your entry point. So this one can come drop here, can come and take, can get 1, 2, 3, take there, and then continue with a move down. Okay, so that is New Zealand and Audi. So now let's look at US dollar CAD as well. US dollar CAD. So US dollar CAD we discussed during the trade recap that we had this bounce, but I have to show you the daily on this pair. US dollar CAD. have to show you the daily. I'm going to switch everything off there. So this is what we discussed last week. So last week, if you look here, you've got a pulsing move and all of this move here as a correction, and we're looking at the similar structure here. Okay, we're looking at a similar structure. So last week we looked at this as a WXY move, and we did say that there was a possibility for this to give us one more to the upside. So now this is what happens here. You've got 1, 2, 3. You've got a correction in between, which is your X 1, 2, 3 move, and now you're getting this one, which will be another possible 1, 2, 3 to go and complete the Y. And what you have now is a very nice setup for upside. You've got here a 3-wave correction, which you could have traded down as well when you reach this target, but now it has gone down in a 3-wave move. So you now it's just coming up like this. I'll show you how you can enter that. But why were we looking for that one move? Why are we looking for this one more move to the upside as well? So we're looking at that because we also had a similar structure here, which was a 1, 2, 3, 4, 5. What is that? This is an 11 string sequence, which is 1, 2. So I need to show you this one clearly, which is 1, 2, 3, 4, 5. What is that? It is a WXY, and my mouse is just a bit slippery, WXY XZ move. Okay, so you can see here in the lower degree you have 1, 2, 3 waves. 3 waves you can't see here because the annotation is a little bit cluttered there, but all around here you're seeing only 3-wave moves. You're seeing only 3-wave moves all the way up to a Z, and at the Z you know that you get an almost guaranteed trade to the downside because you don't get anything more than a triple correction. So this is a triple correction, WXYZ, what we like to call the 10 lot size trade in our group. When you get a Z move, you know you have to get the big downside, and we traded this one when it happened. So why are we looking at that structure like this? Just look at the last piece here. So if you look here between Y and X, let's look at that. Let me put on the labeling here, WXY. So if you look at this last piece here, the red move, you had another 1, 2, 3 to the downside, and similar to what you had here. Here was a flat correction. This one looks like a zigzag, and now you're getting a push up to the upside like that. So we'll be looking for this move. So this move that we're looking at to the upside is similar to this one, the Z. Okay, it's just that on this one is a 3-wave move. We're looking at this as a WXY move. Okay, and your W here is a 3-wave move, which is you can call it which is a flat correction, and here you are also looking for another 3-wave move like that. Okay, so now let's go into the lower time frame. How do you trade this now? So if you look on the 4-hour, we've made a 3-wave move to the upside. So you can clearly see that this is not an impulsive 1, 2, 3, 4, 5. So if it makes a lower degree 3 waves like this, expect another 3-wave move correction like that. And if you get this 3-wave move correction, expect that this one will trend in 3-wave structures. So look what we've done here. We've taken it from a smaller time frame. So what is the next thing to expect? 1, 2, 3, and you've made a bigger structure. So if you've got a bigger structure like this, what do you expect now? You expect another 1, 2, 3 waves. Now these 3 waves is for the bigger degree, as you can see here, and you'll expect that this will eventually make that move to complete that whole swing. And you see here, if you understand the corrective nature of the market, you'll be able to track this even if it's moving slowly. Because when the market moves slowly like this, moves up, retraces, that's when inexperienced traders lose money, because you do not know what is a pullback and what is an impulse. Okay, so when the market is trending, when the market is trending like this, let me show you when how the market moves. So if you've got a market that is trending like this, if you've got everybody, even amateurs or inexperienced traders will make money here, because all that happens there, you just keep selling, you just keep selling, you just keep selling. Right? But then all the money that you've made there, you start losing it because of moves like this, when the market starts going sideways like this. Because here you don't know when the market is going. When is it going up? When is it going down? And that is when you need to master these corrections. It doesn't matter how complex they look. You've got the formula, you've got the wave principle. It applies no matter how complicated the structure looks. Okay? So if you understand it properly, you'll be able to apply it. Right, so that is a US dollar CAD. Now let's look at pound US dollar. So just to recap here on this one, look out for a three-wave correction here for upside. Right, pound US dollar. Pound US dollar, we discussed this one last week. We were looking at this one as a diagonal. We're looking at this one as a diagonal here. Okay, but it doesn't look like that is what is going to play out. So let's just get the labeling on this one up. Looks like it's making a pulsing move to the downside and not necessarily a diagonal. Let's go to the daily. So on the daily, eventually on pound US dollar, the level that you'll be looking at, if you watch one of the videos that I did, a historical analysis on pound US dollar, I was looking for this one. I'm looking for this one to eventually come to this level. So here, when we're looking at this expanded diagonal, we wanted it to give us a three-wave pullback after the diagonal for further move to the downside. It does not look like we're going to get this pullback. So what you do here is just to get corrective structures, sell the corrections all the way down to this level. There's a very high chance that this can also be broken as well. Okay, so that is your next level on pound US dollar. So keep selling this continuation patterns. Keep selling the continuation patterns. That's what you have there. So we just update this. So this one is now not a diagonal, but an impulsive move to the downside. So you're going to be looking here for a wave 3, then a 4. Let's take this off. All right. So that's pound US dollar. We've looked at US dollar CAD. Now we look at US dollar CHF. Right. So US dollar CHF. US dollar CHF, we looked at this correction. Pulsing move to the downside, a correction. Let me just do that correction in a different color. So this is what we looked at last week. You've got a pulsing move to the downside. You've got three-wave move up. You've got three-wave move down. So now we're looking for another three-wave move to the upside, like that. That will be completing this structure. So there's a high chance that this can give you the structure, one more down, and then it goes all the way up like that, giving you this regular flat here. So it is supporting the strength of the US dollar in the next week as well. So you'll be looking for this one, the corrective structure on there. So let's have a look at it on the lower time frame. Let's go for hour. You're getting a corrective structure for more upside on this one here. Let's have a look. So what you had here is this move up, and you get a three-wave correction to the downside, and you're getting another move to the upside here. Okay, let's take this off. So you need to get, if you get a corrective structure here like this one is not going to give you one more down before it goes up. So two things you need to wait for when the market opens is for either a move like this and then upside. So, but what I'm anticipating here is that this will be a corrective structure for the upside. So this may just break here, come back for one down before it goes. Okay, let's just get it on this on the whole screen there. So that's that whole correction that we're looking at. Move down, three-wave correction with a regular flat in the middle, right? So this does not go, you get another move like that, very clear structure. And now what you're looking for is the last red move to the upside. 1, 2, 3, like that. So this is still a lower degree. So that's why I'm saying here, you can get this one doing that, like that. And if that is the structure, what you'll be getting here is a WXY. I shouldn't do it in yellow. I should do it in red to show that there's a red degree. So this will be your W, X, Y move in that degree. And then you'll be looking for this, for it to come and actually the top has already been broken. So this could actually just make one more down before it goes. Okay. And that will be a W, X, Y move before you get upside. Okay, so this whole thing looks corrective. It looks corrective on there. So watch out for a corrective structure. So you've already had this one. So this could be ready to go. Just go like that. Okay. So that's a US dollar chief. US dollar ZAR. Switch off here. So this is the structure that we looked at last week, ending here with what looks like a V pattern here. 1, 2, 3. We looked at this 3-wave correction like that. So that's what we looked at. So I actually thought that US dollar ZAR was going to make 1, 2, 3 and make another 1, 2, 3. Okay, so you'll never know how many corrections it's gonna make. Okay, so you're only getting a single correction here, and that's why you're getting that upside there, and you would have gotten that entry to the upside. So when you enter this, you take it, and you move your stop to break even when you reach that level. Okay, so now this level has also been broken. More weakness for the South African rand. Correction here. Expect more US dollar strength. Okay, so that's how you look at the chart. So you look at both alternatives. Either you're going to get a single correction or you're going to get a double correction like that. So here you only got a single one and it moved like that. But either way, you shouldn't move it because it will give you an entry point, something like this. And now you're looking for a corrective structure here after the break of this top. So if you get a corrective structure, further US dollar strength. So you can see all the correlations are talking to each other there. All right, so that is US dollar ZAR. That completes all the US dollar pairs. Let's look at the pound pairs. We start with pound, not the pound pairs. We start with the yen pairs. So pound yen is the one that we just discussed on the trade recaps. So similar to pound US dollar, this is daily chart. The next stop on pound JPY long term or short to medium term is this level here. So what you had here is this move to the upside, and now we're coming down with the 3-wave move. We came down with the first 3-wave move, and this is that 3-wave move correction that we traded, W, X. So now you've got a move down. So what you're looking for is this one to give you a move down. Eventually you'll get a correction and another move down, giving you this whole move down here as a correction. So now, are you going to get one more move up? So this is actually long-term focused. Are you going to get one more up before you drop? Or is this just going to trend like that and break all the way through? So that's what we need to watch. But what we know for sure is that we are on a downtrend and we'll be selling continuations. So you just need another correction for further downside. So let's look at the 4-hour. Look on the 4-hour. So in the 4-hour, you need to get these entry points. Every time they correct like this on the 1-hour, look out for corrections on the 1-hour. When it's on the 4-hour, it's even better. But look out for decent corrections like that, especially something like this here, something like this. These corrective structures are the most accurate for downside because that is related to the swing. So let me just bring the chart down a little bit more so you can see the relationship between these structures. So these are the kind of corrections that you need. So when it looks like it's going up like that, it's really not, it's just correcting. This structure here is an expanding flat like this. So that's the kind of corrections that you'll be looking at. The small ones are risky, not very good entry points. So you want decent corrections like this one for continuation. Now you've got that move, you got that move. What are you going to wait for? You're going to wait for, it's going to keep correcting to the downside like that. All right. Further downside there. Right, so looking at euro yen, you're getting the same similar structure. You're getting a similar structure on pound JPY. So this is how you can look at this one now. It's very interesting now that you've got, let's bring those two pairs up on the same screen. I've got euro yen on the left hand side. I'm going to bring pound yen again, just so you can see how you can trade this. I want you to look at this. Okay, on this. Okay, I need to put them both on the 240 on the 4 hour. You see how similar these structures are. So on the left hand side, you've got pound JPY. This is the structure that we're looking at on pound JPY, like that. So you can see that pound JPY, the left hand side is euro, and the right hand side is pound JPY. And you've got this similar structure. This is the structure that we traded up and down. Okay, we get the move down, we get a move up, and now we're trading this move to the downside. So the interesting thing between these two pairs is that this one, which is pound yen, has already broken this low. Euro yen has not broken that low. So you would expect that euro yen will also come and break the low and follow the same structure as pound yen for further downside. Okay, so if you were late in a trade, but you actually also late on this one, but it will be much better for you to look at EURJPY, because you'll be expecting that EURJPY will eventually break the low similar to what pound yen has done. So that is how you can trade these similar structures. Okay, so let's just go back to the individual chart on euro yen. So that's how it looks. So you'll be looking for this as your next target. Okay, so if you come down here, you'll start looking for a corrective structure like this. I don't expect this to bounce here. I'm expecting further continuation to the downside here on euro yen as well, similar to pound yen. So euro, pound yen, also continuation to the downside. Looking at US dollar JPY. Okay, so US dollar JPY, we have to look at the daily chart here and what we've been looking at since last year. Okay, so if you look at US dollar JPY, you've got something like that. You've got a passing move to the upside like that, and you get a three-wave move down, you get a three-wave move correction, and after that, what you get is another three-wave move to the downside. Not necessarily to the downside. Let's do that. I want to use a different color. You get a move down, a three-wave move down, and this side, you'll see why I'm doing this, and this side, you get this three-wave move to the downside. What have I just done there? So what you have there is a 1, 2, 3-wave move to the downside, and a three-wave correction, which will be your X. And this structure here is clearly is a clear zigzag, and this side you've got another structure like this, which breaks the top here and comes down in a passing 1, 2, 3, 4, 5 move. So what is this structure here? This structure is simply a W move, three-wave move down, a X move, and 1, 2, 3 expanding flat. So you have got a zigzag in combination with an expanding flat. Now, after a WXY move, are we now, this is the move that we were looking for. So the move that we're looking for was this one. The question is, are we ready to go, or are we going to get a Z? Okay, so that shouldn't be a headache for us. What we trade is what we have at this stage. So you've got a three-wave move up. Okay, we thought that was going to go with a strong pulsing move as this one, but it doesn't look like it's going to do that as yet. So, but what we have here is a three-wave move up, and you're getting this pullback here. I'm going to go into the lower time frame and just show this pullback, and this pullback is showing something like this, like a three-wave move. So if that is what you're getting, you may get another three-wave move to the upside that will come and tag this level. Okay, so taking that level, there's a strong possibility that this will come down and go and give you a structure like this, which will be a bigger regular flat, which you can label as, let's get a different color, WXY, before it goes. So what we're expecting here on US dollar JPY is a correction that is this size. Okay, so let's go into the lower time frame and see how that is playing out. Remember US dollar strength. Let's see if there is confirmation from the chart of further strength on EURJPY. You can see here it's coming down in a corrective structure. This will eventually break to the upside. It will break up. So what you don't know at this stage is whether it will break and go all the way. But remember, even if you know the direction, you still need to understand that the market does not move in a straight line. So what you would have here is that move to the downside. Let me clear everything and do it again with the right degrees. So you've got that move to the downside. And here you are getting a pulsing move up. You are getting a corrective move to the downside. Possibilities are that you're going to get a move back to this level, and you can even get this move doing this before it starts going up with that move that we are looking for. And that will just simply be an A, B, C correction, not a WXY, but an A, B, C correction, and this could be a regular flat. Okay, so that's how the structure looks. But there is an alternative here, and if I just go back, take a screenshot of what I've just done. Another possibility, but the buyers will still be the same, but I'm not looking, my first preference is the first one that I've just shown. So another possibility is that this one actually comes and takes the top there and comes down with this move, and then it goes. So either way, it doesn't really matter because you're going to take the trade here anyway. Okay, so if it starts reversing here, you're going to move your straight to break even when you reach this level. So that if it gives you the first one, where it comes down here first before it goes, then it takes you out for no loss and you look for another entry to the upside. But you don't miss it here. When it breaks up to the upside, you take the trade to the upside. Even if it's going to do this, come down, you know you should be able to protect your trade. So what is the next trade that you're going to be looking for in the next week? You're going to be looking for a move up here, correction, and at least minimum this level if we're not going to come back and retest there. So you have to look at that. So that is a strong possibility that we can come all the way back to 113 on US dollar JPY. All right, let's look at the rest of the yen pairs. CHFJPY. So CHFJPY, we looked at the diagonal last week, and it is looks like it is breaking to the downside. Is the diagonal that we looked at, not shown there. Is the diagonal, textbook diagonal there, CHFJPY. So now we have broken out of the diagonal. What you want to wait for is a clear corrective structure. You need to get a clear corrective structure here, and you will be looking for this to come down to this level. Okay, so that's what you're going to be looking for. Look for that corrective structure and look to target that level. What do you have here now? On the 4 hour, you can look on the 1 hour as well. So on the 1 hour, you're getting this structure. So this can do this first, a three-way move up before we drop. Okay, so giving you a V pattern there. So you can see that we're getting this move here. You're getting a V pattern structure. So this is how this could play out. Let's just do that. In the lower time frame, if you're looking for a correction, there's also a possibility that this just comes here, takes this top, this level here, and comes down. Also, you need to look out for this one. 1, 2, 3, and down. Either way, you're just looking for a corrective structure before you come down. Any indication of a sell setup to the downside, you take that. All right, so that CHFJPY. Let's look at Audi and New Zealand, and as well as CAD. So Audi New Zealand, continuation to the downside. Looking for that level. Looking to take this level minimum. What you have here is a move up. It's a 3-wave move to the downside. There's a possibility for this one to give you upside here like that. Okay, so watch out for any reaction in this level. And this is not a support or resistance level. It is a structural level. So look at what happens here, whether you're going to get a corrective structure here. If you get a corrective structure here, you're getting continuation to the downside. But if you get a passing move to the upside, then you look for entry to the upside to at least take this one first before we come down. And that will be a regular flat. It does not have to be a regular flat, so this can break here first and go back up, and that will just change the type of correction that you have. So in that case, you may have an expanding or a running flat, and that's how you look at that. All right, so let's just look at that. So that we are already on the 1 hour. So this can give you that bounce. You can start getting that bounce and reversal there. Look out for what happens there. That's AUDJPY, New Zealand JPY. New Zealand JPY, similar structure. Let's just go back to 1 4 hour. Let's go daily. New Zealand JPY, you've got the move up. You're looking for this to come back down to this level. You're looking for this level minimum, because at that level you could have a bounce back before you come down, making this a 1, 1, 2, 3, and then down. Okay, let's just do that 1, 2, 3 in a different color so you can see it clearly. 1, 2, 3. So there's a possibility of a bounce at that level. That's the structural level where you can get a bounce. Okay, so keep an eye now. So what you need to do here, if you are trading, if you want to trade short trades, you can just take continuations to the downside, minimum that level. Okay, so that's New Zealand JPY. So if New Zealand JPY has got a clear downside structure, let's go back to 1 to AUD. So AUD may also have continuation to the downside. We're on the daily here, so this is a 1, 2, 3 wave structure here. So New Zealand also may have this continuation to the downside. So actually, if you're looking on the daily here, look for lower time frame correction. So we may not get that bounce to the upside because this 3 wave correction has already completed. So just look out for a structure like this and target this level. And target that level, similar to what you'll be doing on New Zealand JPY. So continuation to the downside, all the way back to that level. It may not necessarily go all the way to down to that level. It may even just give you a 3 wave move like that. Okay, and bounce. Right, so that's what you're going to be looking at, but it doesn't matter either way, you will get the direction right. Okay, so that's New Zealand. And lastly on the yen pairs will be CADJPY. CADJPY. So CAD in general looks like it's going to be strong in the next coming trading sessions. Let's have a look here. We've got a pulsing move to the upside. You get a correction here. 3 wave correction. 1, 2, 3. And this is what I expected. I was expecting that we're going to come back and tag here. It did not come. It did not make that move. But instead, it has made a 1, a move to the upside here. So now, if you look at this, it's a little bit tricky because you cannot really tell if this is going to make a 1, 2, 1 down, up, a passing move to the downside, and give you this 3 wave structure, then comes and confirms the break here, which will give you the structure, reversal, and then back up. Okay, so that's what you need to have a look here. If you start getting an impulsive move here, you can look for entry points to the upside. Okay, look for continuation pattern to the upside when it looks like that. Okay, and then when it gets to that level, you need to move it to break even because it can give you 1 down before it goes. That actually is in a different color. It should be in this. We should have this one coming down here and giving us this structure here like that. Okay, but for now we need to watch what this structure is, because that structure here could have been a move like that, and if it's a move like that, you can still have this one correcting like this. So that's why we need more information to see what we're going to get here, whether we're going to come up to that level. All right, so we just need to wait and be patient. No need to rush on that. All right, so that's all the yen pairs. Now let's look at the pound pairs. Look at pound CAD. Pound CAD has been very easy to trade. Okay, so pound CAD, all you're looking for now is to eventually come to a level that is the same as this one. So you just want, let's just have a look here. We're looking for continuation on pound CAD. Let's do that. Still look for more continuation to the downside, at least around that level, at least around this level. So still continuation to the downside. You can come down to this level, and there's also a harmonic pattern that this harmonic pattern, actually we showed it when we were still only here, right? So I'm going to show you again what I show every week on this pair between pound CAD and pound AUD, and look how amazing it is and how easy it is to trade this pair here. So you've got a three-wave move up here, and we're coming down, and they looks like there's a harmonic pattern. Let's see here. So your harmonic pattern here there will look something like this. 2, 3, and you'll be looking for it. At the 88 is where you've got the blue box as well. So that level is a critical level in the next coming session. So let's see what happens there. So, but I need to show you again the correlation that has been going peep for the last couple of weeks. And while the other pair is leading the other, it was easy to just follow the one pair. That is the correlation between pound CAD and pound AUD. Right hand side is pound AUD. All right, I need to put them both on the daily structure time frames. Okay, I'm going to switch everything off here so you can see the structure clearly. So this is very easy if you know what you are doing. Right, so let's look at the structure. Right hand side is pound AUD. Left hand side is pound CAD. That is what we're trading now. So if you look on the left hand side, we had a pulsing move from swing high to this swing low here, and we had a three-wave 1, 2, 3 correction. So the same thing happened on pound CAD, but pound CAD, okay, as much as you had that swing low to swing high to swing low coming down like this, what you're having is that you are only having the three-wave structure on pound CAD now. 1, 2, 3. You're having this three-wave structure on pound CAD now, but on pound AUD, that three-wave structure has played out in 2017 already. So that is why we were able to trade pound CAD coming down, because what pound AUD did in 2017 was a three-wave move to the downside like that. Simple. So this move had already happened last year, and this move is the one that is happening now. If you look at the trade recaps, we also traded this short move to the upside because we were expecting that it will be exactly the same here, and it is doing exactly the same. That is why even last week when we reached this level, I said we're expecting that it will continue further down, because even here, when it made the correction, it continued further down and reversed at the 88. Similarly here, we'll be expecting reversal about around the 88 area, because there looks to be a bad pattern there. Okay, so if you look on the left-hand side, you can see that bad played out last year already. Let's just make it properly. Oh, there we go. So it's already there. If you, I don't know if you can see clearly there. So this bad pattern has already played out in has already played out in pound AUD, right? So that's what you have there. Now we'll be expecting that you're gonna have continuation down all the way, and then a move up like that, and then a move up like that, similar to what happened on pound AUD. Okay, clear like that, simple. Without a lot of letters and a lot of numbering, you can see the structure clearly. Okay, I see there's something on the chat box. Let me just have a look what is there. Yes, I usually only use the harmonics just to confirm structure. The sequence must come first. The sequence of the cycle must come first. You must just use your harmonics to confirm. All right. Just checking what's on the chat box here. All right. So this is one of those trades that do not give you stress. Gives you confidence because you've seen it play out before. Now you can trade it like that. This one made this move and dropped. So we'll be expecting similar structure here. Okay, so that concludes pound AUD and pound CAD like that. So let's have a look at pound AUD now. Let's look at pound AUD. So pound AUD, Okay, so this is a clear zigzag that has already played out there. I need to get the right color. We've already had a three-wave move to the downside like that, so maybe a little bit of a push to the downside, but this may give you you may eventually get another three-wave pullback there. Okay, or a smaller one than this one, not this big. So I'm expecting that you keep getting smaller correction like that, because this is supposed to be a pulsing move to the downside. Okay, so and then you'll be looking for this to come down to the 88 area also again. That's still pound CAD. I think I've already shown that I'm looking for it to come down around this level. So nothing stops this from correcting around this level, the current levels. Okay, let's just look at pound AUD again. Pound AUD alone now. So pound AUD, three-wave move down like that. We've already broken this here. A correction means we're coming further down. Okay, a break of this low here, and correction, it means we're going to be coming back down to these levels. Okay, let's just have a look in the lower time frame. Go to the 4-hour. So on the 4-hour, this could be making a flat for you. 1, 2. We'll be looking for this to come retest that level. It has broken it. So if it has broken it like this, this can make a running flat, and a running flat can turn anywhere. So it doesn't give you a warning. So you just need to be careful if you're tracking this to the upside. Okay, and if you get a passing move to the downside and a continuation pattern, take it, because this running flat can turn anywhere. There is no clear guideline as to how far the running flat goes. So this will be your running flat. Okay, so now you've got this passing move to the upside. Small correction here, move like that, but that could just be to continue with a move down, a three-wave pullback and continuation to the downside. That's pound AUD. Let's look at the rest. Pound CHF. So pound CHF, go daily, see what you're looking for. Now looking at the higher time frame, pound CHF, you're looking for this level. You're looking for this level. You can see that this structure is similar to the one that you have on pound US dollar. You'll be looking for this to come down minimum, not minimum, around this level. It can give you a correction along this this structure here, but I'm anticipating that will come. If you get a correction here, you need to get a bigger one than this. You're gonna need to get a bigger one than this, so it means sideways for a couple of days there before you come down to this level. So you can keep selling this until every time you get continuation patterns, because that could also be a 1, 2, 3, 4, 5 move to the downside. Okay, it could be a passing move that goes all the way. Remember, pound US dollar structure, we had that complex correction like that, similar to what you're having on pound CHF, and you'll be looking for this level at least. All right. So continuations, keep selling them until you start seeing sideways corrections. Right, that's pound CHF, AUD, CAD, and next one is pound New Zealand. Let's look at pound New Zealand. Okay, now if we talk about correlation, you can see all the other pound pairs have been on a downtrend. So that is why you will find that you find my analysis, you get pairs that have got same quoted or same base currencies doing the opposite things. Because here now you can see that this is going up because of the New Zealand. Okay, the rest of the pound pairs are looking downside, but this one in the last couple of days, last 3 days of last week, has made a move to the upside. So what we expect with this move, we've already got 1, 2, 3 here. So we may be getting, we also have that three-wave pullback there. Expect continuation. That could come and take that level. It could come and take that level, and this will be a WXY move. And after completing that, it can give you one down before you go further up. Okay, so this is one, and the three-wave move in the middle. Simple like that. Okay, can do this as well. Lower degree, 1, 2, 3. Okay, you can't see the 3 waves here, but it is 3 waves if you go to the lower time frame. 1, 2, 3 again. Okay, so if we just take this top here, there's a possibility that this will come down and we can have this structure completing like that as a regular flag. Now you can see clearly that this will be a 1, 2, 3 wave structure before you get a move to the upside. So what you need to look at on pound New Zealand on the lower time frame, look out for continuation patterns. Look out for small flags. So here you've got a 1, 2, 3 down. If you get a flag here, this could be continuing with the upside, with the uptrend. So there's also a possibility of this before it goes. Either way, you will get the trade to the upside. All right, that's all the pound pairs. Now we can look at the euro, at the euros. Looking at the euros, euro pound. So euro pound, if we go to the 4-hour, on the 4-hour, we've been looking for this one to just come and take this level. And if you look at that, you'll see that it takes it right to the peep. It has taken that level, and now you're getting a downtrend. So you've got a pulsing move to the downside, get a continuation pattern like this, a flag pattern, you'll take this one to the downside. Okay, first take it to around the 60% area, and eventually your target should be down here at this level. This is a structural level, not a support or resistance level. I have to keep stressing that because some may think that I'm trading support and resistance here, but there's no, I'm not trading support or resistance. I'm trading structures, and I'm trading and I use Elliott and I use Fibonacci to project my levels. Okay. All right, so that is euro pound. Looking at the rest of the euros. Okay, no one should have missed this trade when we did the analysis here on Sunday. When we were here, I said, according to the strategy that we use and the indicator that we use for entries, this has confirmed downside. Okay, I said it has confirmed downside when we were here. Okay, after this flag, you could have just entered here and you would have go ahead all that move to the downside. Okay. Now, if you remember this structure, I showed you the correlation between EURJPY and pound JPY. So this is making the exact same structure. But remember, pound JPY, pound JPY has already broken this low. It has already broken this low. So this one, breaking this low, opens further downside. So you've got a longer downtrend on EURCHF. Okay, so any correction here, you take the trade and just hold it all the way. Let's see the level, the target here on EUROCHF. Let's go daily. If you get a corrective structure there, if you get a corrective structure, this will have been your 1, 2, and you'll be coming back down around this level. Okay, and you can see that this has broken. So, but it has to break and correct, because if it just breaks, it can break and give you this one move to the downside, giving you a 3-wave structure in the middle. But this is too impulsive to make a 3-wave structure. So, and I don't expect that we're going to get this move to the upside. I'm expecting continuation. All right, so that's EUROCHF. EURCAD, I showed EURCAD during the trade recap. This is, if you look at EURCAD as well, we are around that level, 1, 2, 1, 2. Is this going for one up before it comes down? I'm more inclined for this to continue to the downside. And pound CAD also has made this structure and has already broken it. Okay, it has already broken it, so I expect further downside to be opened on EURCAD. Let's just bring pound CAD, relationship between this one and pound CAD, so you can see what I'm talking about. Right, both on the daily. So this is that pullback that we're looking at on EURCAD, this one here. We also looked at this pullback at the same time on pound CAD. Look what happened to pound CAD. Pound CAD has already broken this level. This one has not. So this is why I'm anticipating, I'm expecting that if we get a correction here, this will open further downside on EURCAD as well. So keep an eye on this one. May take a couple of days or a couple of trading sessions to get a corrective structure for entry in that level. Okay, so let's go back to one chart. Okay, so that is EURCAD. Right, Euro New Zealand. So Euro New Zealand, we spoke about this structure, but this is not my actual target. Okay, we spoke about taking this level last week because we were building this correction. Look what happens. When it is a structural level, it will be respected. Okay, so last week we were busy building the structure. We for the last 2 weeks we were building this corrective structure, and we were looking for upside here. But what does this mean? Does this mean that we're going to reverse now? No, we're actually looking at this as a 1, 2, 1, 2, 3 wave structure. There's a possibility here. Let me draw it with different colors so you can see what I'm looking at. You've got a 3-wave move down, and you've got this complex corrective structure here in the middle that does something like this: 1, 2, 3, like that. So there is a possibility for this to give you one down like this, and the euros are weak anyway, so we'd be expecting that you're going to get a move down here like that. So the New Zealand has been strong. That is why this one pushed up and then down. So there's been strength in the New Zealand, so hence this upside while the other euros were falling. Okay, but now you've got a reversal there, but that reversal does not mean anything until you get a corrective structure here. So that could be giving you this this WXY move before you get upside on this level. So that upside that we're looking at, what is the target? Now you need to have a look here. Let's have a look where the target is on the daily. My eventual target is this level. Still very far. Still very far. That's why we're looking at this as a corrective structure just to propel us back to that level. Okay, still about 1,200 pips before we reach that level. So if this trend has already started to that level, you will keep getting continuation patterns. But if you get a reversal here and a corrective structure, you're going to get one down before it goes. Either way, you should not miss the 1,200 pips to the upside. Okay, so that is on the daily. And if you look on the low time frame, let's look at the 4-hour. You had that reversal. So that reversal could be the one that's going to give us one more down, but not necessarily. You need to confirm this could, like, let's just go to the 1 hour and show you the two possibilities. And this is why you need to have a solid strategy to protect you in situations like this, because even if you know how the market moves like that, if you do not know how to time it, and if you do not know the strategy, you will still lose the trade. So this is a possibility. So you could get this one. It has to give you a clear correction. This is not a correction, it's a passing move. So here's a possibility. This one gives you that and then drops. Or if it doesn't do that, gives you that structure, gives you this correction, up and then down. So you need to anticipate both these possibilities. But even that, you need to protect yourself, because this down move may not be the one that goes. So that move could just be a 3-wave move in between, building up this higher degree structure like this that will then propel this to that eventual target around 183 that we're looking for. So you see how complex these structures can be. So you need to have a strategy to be able to trade while you're within this, because you do not want the trades inside here. You want these trades. Those are the trades that you're looking for. So anticipate both structures and understand where they fall in the sequence. Okay, so that's what you're going to be looking at. I'm anticipating down here and then something like that. So, but it's too premature to tell what's going to happen there. You're going to wait for the corrective structure there. All right, let's look at the rest of the pairs. EURCAD, have we discussed EURCAD? Okay, we've already looked at EURCAD. So EURCAD, continuation to the downside. Every time you get continuation, drop. Is that all the Euro pairs? EURAUD. EURAUD, 3-wave move to the upside, easy. Now you're getting a pulse, you're getting a correction. Look for this one on the 1 hour. When you break to the downside, this one will continue to the downside. Right. I see there's something on the chat box. Let me check it quickly. Is somebody saying something? Okay, thank you. Right, so that's EURAUD. Thank you, Harry. Right, so that's the 3-wave move that you're looking at here. Very easy. So this should continue to the downside, but do not rush. Do not rush. So this one is setting up very nicely. If you did not take it from the top there, it's a very nice entry around about this level. Is making an entry, a corrective structure for that is showing continuation. All right, and that's all the euro pairs. Now let's look at gold and silver. Start with gold. Where's gold here? Where's my gold here? Let's look at gold. I'm going to put it up here. Thank you. Welcome, guys. We were disconnected, but that's fine. We can carry on now. Just bring my annotation out again. And looking at gold. It's a long weekend. We had a long weekend in South Africa, guys. So I'm not in my trading room. So it's on the road. Let's get gold out. Say US dollar. All right, so gold. Gold is very easy to trade, as I've been saying for the last couple of weeks. You shouldn't have missed gold. So this is what happens with gold. Every time you get a corrective structure, you just keep selling gold. And I've indicated it a couple of weeks back that we need to come to this level. Okay. So every time you get a continuation like this, a corrective structure like this, you keep selling all the way up to this level. You're looking to come to this level. It looked very far when we were still here, but it's not so far now. It's only $100 away. Okay, only about $100 an ounce away. So we need to just look for those continuation patterns there. So what is the current structure that we're having there on gold on the 4-hour? You're getting another continuation structure. So these are not moves these are not reversals, guys. So these are corrective structures, and you need to understand how these corrective structures plays out, because you can just say, it's easy for me to just say a corrective structure and you reverse. But when you get a complex level one like this, it's two things that you do. If you do not understand how structures work, you can just wait for this to break out of this pattern. So if you understand structure, you'll see that this is a pulsing move, and this is a 1, 2, 3 correction, and you could get a move to the upside like this before you drop. Okay, so that's how you can look at. So gold, you just keep looking for continuation patterns like this to the downside. Okay, when I get a push up that takes the top there, and I see a pulsing move and a corrective structure, it's a nice entry point and the stop loss in that area, and you just hold it for further downside. It's easy as that. That's how you look at gold. So you don't look for any upside when it goes up like this. Even if it's strong moves like this, they're just correcting. Okay, so let's look at silver. Silver, same, but here with silver, you can see that we're still on that downtrend, but now you're getting a corrective structure as well on silver. So here's what you look at. You've got a 3-wave move up here, and you've got this corrective structure here, which could give you a bounce here like that and a further downside. Okay, so that's how you look at this one. Not very clear. I'd rather trade gold than trade silver. Okay, that structure will still come down here, can still come down here like that, and 1, 2, 3 up before we drop. So keep selling. Keep selling. Let's have a look on the daily on silver, see how far this one is going. It's clear. So initially, what you're going to look at for silver is for it to come to this level. You're going to be looking for this to come to that level while gold is dropping. Okay, a break of that level will open silver for this level, 15. Actually, that's the level that you should be looking at on silver. Let's have a look here. this level here. That is a structural level on silver. You're getting a clear corrective structure here. Even if it pushes up here, this completion of this corrective structure will open silver for this level, for 14, around the 14 area. Okay, let's see if there's something on the chat box. Thanks, Ari. We are on record. Great stuff. Right, so that's silver and gold. Now let's look at the indices. S&P 500, S&P, right, S&P 500. So we were looking for these to take this top here. We're looking for price to come and take that top. It has missed it by a few pips. So now, is this now the reversal on the S&P 500? And a gap means a strong move to the downside. So we need to look at continuation. So let's do this. I just need to switch the noise off here. Okay, that's done. All right, so let's continue. So is this now the reversal on the S&P 500? Okay, is this what you're gonna have here? Let me remove video panels. Okay, good. Let's carry on. All right, so is this now the reversal? Right, so you've got that looked like a correction. So now let's have a look what happens here. Let's just go 4 hours and see how this one is playing out. So remember what we were looking at here was a pulsing move here, and we're looking for this one is, okay, let me just show you the whole structure from the beginning when this correction started. So when the correction started, we looked at this one as a pulsing move to the downside, and it made another pulsing move to the upside. Okay, almost a 3-wave move to the upside. So you can see that before that there was no correction. So we also looked at this one as a pulsing move to the downside. And I was expecting that this one was going to give us a 3-wave move like that takes this top and give us the green move to the downside. Okay, and after getting the green, we would have been looking for this one to come up like that. And then we're gonna look for the yellow, which is this one, to come up like that before you then get this move all the way up. Okay, but that's what happens when you don't have enough information during the correction. So what we're looking at here now is for this one here. Let's just have a look here. There's a possibility that this is all the correction that you would have had here. And what you need to look out for here is whether this is simply going to give you a correction here like that before it takes. Remember, it did not take this top here. It still missed it by a few pips. So there's a possibility that you get this correction here to come and take this top before you get this reversal. And that the structure that you're going to get here is this 3-wave move here. 1, 2, 3 here, and then a move to the downside before you start getting the move to the upside. So if you get that one as a corrective structure, then you're gonna get continuation to the upside. Maybe take here before you come down, or you are already coming down, or we're already coming down. Okay, so let's have a look here. Are we coming down? Let's look at the 4 hour. So usually gaps are indication of strong moves to the downside. So you've got a gap down here, corrective structure here. Whether it's on the 1 hour, take it down. Okay, take it down, and you will only be out of the trade if this one comes down correctively, which I do not think is the case. Okay, so this is what you look at: 1, 2, 3, down. If we're going to touch there, then that's fine. We're going to touch there and come down, or this is already the correction that has started to the downside. Okay, so looking at the Nasdaq, so it looks like the indices are looking downside. If we're looking on the 240, you've got one. This one is taking the top here. Are we going to come down with this move? It doesn't look likely. It doesn't look likely that that is the move. So let's have a look here. What is happening with the Nasdaq? So even if though we've got this move here to the downside, this can just be a 3-wave move to the upside before you drop. Okay, so not very clear. Let's have a look on the daily. Let's have a look on the daily. we had this running flat here, and it made a 1, 2, 3, 4, 5. So right here, there's a possibility that we are starting the correction here. So we could be getting this move. So it is possible that we are starting to get this move. So that correction can just be deeper. It can just be deeper, something like that. It can just be deeper, get a correction for further upside. Because you've got a 3-wave move down, you've got a big correction here, you've got 5 waves up. So this could be your 1, 2, and then you're going to be looking for the 3 once this correction is completed. So the downside here may not be the reversal. So that is why this will support S&P 500 short move to the upside. Looking now at the UK 500, let's have a look. So the UK 500 has made a 3-wave move down. We are on the daily now. Correction. This correction, there's a possibility for this to, so you can see that all the indices wants to make moves down. So doesn't mean reversal, those are corrective moves. So we'll be looking for that move. You've already had a reversal there. So now look out for a correction in this level. At current levels, wherever you get this correction, you can take it down for this move before it goes. Okay. So indices are looking up, but currently pulling back for corrections. Right, that is a UK 100, and then the Nikkei. If you look at the Nikkei, we had this three-wave correction there, and we had 1, 2. I was looking for this one to make this one here. So you can see the pullbacks continue on all the indices. We're looking for this one as a pullback, and after the pullback, we'll expect continuation to the upside. Okay, so you're getting a nice corrective structure here. I don't think that this is a reversal. If it is, then we're going to update as it goes. All right. It is actually possible that you're getting this one here as a 1, 2, 3. No. So this can only be this continuation, this corrective structure. So look at it as a corrective structure, and then we'll look for this to retest the top. Okay, so that is the top that the Nasdaq has already broken. So and it will support this one to go and test that top as well. Right, so that's the Nikkei, the DAX. They're all pulling back. You can see 1, 2, 3 on the DAX. So possibly that this one comes back here, retests the low before it goes, making this a 1, 2, an impulse up, correction, and then a move up. So look out for continuation to the downside to complete this correction to the downside. Okay, so continuation for this to complete to the downside, to that level. Lastly, the Nifty. Nifty also just pulling back for a corrective structure here on the daily. 3-wave pullback. You've been getting this one as a 1, 2, and it looks like here you're making an internal 1, 2, 3, 4, 5, something like this. 1, 2, 3, 4, 5. So that's why we're expecting continuation here, a correction there, and then continuation after that. Let's look in the 4-hour. Okay, so you can see that it keeps making these small corrections, small corrections, small corrections. So let's see if we're going to get something similar to this one for further upside. Okay, so those are all the indices. Now, if we look at the cryptos, we look at Bitcoin. So Bitcoin. So if you're looking at Bitcoin on the 4-hour, so I'm going to look at the indices at these cryptos just on the lower time frames now. So I'm expecting here that we're going to get this one coming down here to this level with this slowing down pattern, like a V pattern, and then maybe a pullback here that will retest this level before we get further drop. But let's look at the higher time frame and see how we have been looking at this all along. If I look on the daily, if you look on the daily, here the 3-wave move down. That's clear. You have a 3-wave move down, and then the start of this correction here. So this correction actually starts with this move, right? Is this move now 1, 2, making a running flat there. Let's make that green there. Get this running flat there, which we will use the red here, not the red. Okay, we can use the green. 1, 2. Are we getting this move? This move here. So we'll be looking for this three-wave structure here. Still a possibility for this to be a running flat in the red degree before we come down here. But let's see how it plays out. It is currently correcting, telling us that this is still gonna get further upside before we get any reversal, if we're gonna have any. Okay, so that's how we're looking at this one here. So I'm just gonna go back to the 4-hour and see what is happening with that structure. You can clearly see that it is a corrective structure there. So anything that looks like that, you're taking it down. But it has to be a corrective structure for downside. Now, if you look at LITECOIN, LITECOIN should have this similar structure. Similar structure as Bitcoin, just look for a corrective structure here. Why am I using red? Let me use yellow. Let's look for a similar structure, something like this, for further downside. Okay, so this does not mean anything, it's just a pullback. Could be getting a structure like this for continuation to the downside. No strength to the upside on the cryptocurrencies. Ethereum is the one that is lagging the other two. I need to show you the leg. So you can see the other structures have already made this move and this move as well. So Ethereum has only made this pullback and this three-wave move to the downside. This three-wave move to the downside. Okay, it is now breaking this level. The Bitcoin has also broken it and made a move like this and come down like that. So possible that Ethereum does the same, or even go and retest this level before it comes down here, giving me the structure here. So a 1, 2, 3-wave move in the middle and a pullback to the upside and comes down. But if it is breaking here, if it is breaking here, it could be a running flat, and the running flat can turn anywhere, similar to what happened with a Bitcoin. Right, that is Ethereum. And lastly, Ripple. Let's look at Ripple, XRP there. Ripple, see, it has broken that low, that opens further downside. Correction, take it further down. One more down. Okay, so that's how you look at it. So initially we were looking for this one to be a 1, 2, 3 like that before it comes down. But it looks like it's going down all the way. But it is still within the rules of an expanding flat. So if it has broken this here, there's still a possibility that this reverses like this and gives us this corrective structure, which should have been a flat before it comes down. Okay, so weakness in the cryptocurrencies all round. All right, so that's all I had for you guys today. Good luck for the week ahead. All the best. Hope you enjoyed the webinar. Please like and share. Thank you for attending. Have a great week. Cheers. Bye-bye. US oil. So we missed US oil. Let's do that one. So US oil looks like we're having an 1, 2, but now this looks like a corrective structure. We're going to get something like this. Remember, this was a passing move to the downside. We discussed this move. It was a 1, 2, 3, 4, 5 to the downside, and this could be a corrective structure, a corrective structure, flat correction in the middle there, and then we may even get a structure like this. That three-wave move to the downside could eventually give us a propelling move to the upside. So what are we looking at in the next coming trading session? Let's look in the 4-hour on oil. Let's have a look here. You had a pulsing move here, you had a corrective structure here. Let's look at this corrective structure. 1, 2, 3, 4, 5 down. 1, 2, 3 correction. 1, 2, 3. And now it has made this 1, 2, 3 again. Possibly you can make another 1, 2, 3, making this a WXY move that will give you a structure like this, and a further move to the upside as we indicated on the daily, and a move like this. So a little bit more sideways here on oil with this in the middle, with this 3-wave correction in the middle. It looks like it's giving us a W. We already have a 3-wave up, we've got a 3-wave down, could give us another 3-wave to the upside, and then we're gonna take the top here and get this as an overall corrective structure in the higher degree WXY before we go to the upside. That's how we're looking at oil. All right, thank you for that one. Cheers, guys.